Hey guys, Sunday, September 8th, 2024. Let's see what the Black Widow wants to do this week. Been a while, I haven't posted a video. I've been watching, I've been trading, I've just been quiet. I didn't see any reason to post anything on nat gas until we get close to the high around 230, and we are there. So let's see what the charts are telling us for this week, what to watch out. Looking at our, you can say 5-year weekly chart. Key of concern, if you are long, is this one right here, 240. Keep an eye on that. There's some here around 235, 236. This is a weaker one, 230, and that's where we're at right now, 230. Let's see if we could close above 230 this whole week. Once this week ends and we're above 230, there's a high probability that it's going to get higher, but I'm going to show you some of the obstacles and the resistance that it's going to be facing. And the first one is 240 in that 236 area. This is the point of control of 259. You can say 260 for the week. You can see volume. So far, it's good. And you got a fail new low. So it wanted to go lower, maybe fill that gap, but it didn't. And then change of contract, and now it wants to see if it could go higher. But we haven't closed above 230 yet, so that's the most important thing for this whole week that you should remember. Can we close above 230? Looking at the daily, looking at 3 months worth of data, you can see this resistance area here. Your next one is right here. You can say 240. Remember that number? I've been saying 240. Value area high, 241. So you can say 240-ish around there, value area high. And this area right here from 250 all the way to 262 is going to be a hot zone too. This is your value area high. So I look at it, this is where the bears are waiting for us right here, this area. Volume on the daily was not the best, but so far it's all green, meaning the bulls are showing up. This is where the bears had their last attempt to push it lower at September 4th. And it was just chopping around the point of control, which was 213, 214. That's where the middle line of the sand is, line in the sand, and this is where it was just oscillating back and forth. And now, if the theory is correct, fail new low, and now it wants to go higher. This is what it should probably be doing. Let's go into our simple glance chart and see, looking at the monthly, let's close it out because it's too big. In order for it to be bullish, you're very conservative. You need to close above 240. Remember that number? We've been talking about 240. If you close above 240, you got the 20 SMA on the monthly, then high probability you might get higher. Big target would be the point of control of 282 on the monthly. But so far, the MACD is still positive. On the weekly, we got a PPS buy signal. So the theory is that you get a PPS buy signal and then you get a pullback. Maybe not a big one, but just a little correction. And then that's when you will get in. But you close above the mobiles, which is 224. You're above it right there at 230. So that is bullish. It may not go back. It may probably continue from here. MACD signal is positive as of last week, or maybe 2 weeks ago. So yeah, so now we just got the positive signal was this week. So that's how it works out. You got the 20 SMA on the weekly, 234. You got the 50 SMA, 240. Remember 240? That's probably going to move a little bit. And you got this big target or big level, 258. You got to watch out. But we'll take baby steps. So far, let's see if there's a correction or a pullback next week. And then it wants to, push higher. On the daily, is interesting. Let's see if I could open this up a little bit. So there's a couple of things here. The MACD first is positive. You're above the 20, the 50, the 200, and you're about to battle the 100. But you got the linear regression channel right up here, and the linear regression channel is slightly sideways to a little bit higher, a little biased to the upside. So seeing the price action the way you did, bounced, fail new low, bounce. It looks like it wants to now go higher and maybe hit some price discovery, to higher prices up here. So you got a value area high around 248. You got this area on the cloud. You want to keep an eye on 252. And you got this level right here, 234, 235, you want to keep an eye on. And you need to close above 230 to show some momentum for the bulls to penetrate the cloud. Now, remember one thing, according to the Ichimoku theory, once you're in the cloud, prices get very wild. So you're going to get a lot of erratic. This is simple. This is not bad when it's just, consolidating. But now when you get here, according to the theory, we'll see how his price action is going to behave, but it gets a little wild in here until you could break above 252 and close positive. Once you're up here and you close and you could hold this level, according to the Ichimoku theory, on the short-term time frame, you are officially bullish. And that all remains to be seen if we could get out of this cloud. So once that happens, then things look positive on the short term. Then you got to wait for the weekly, which is a domino effect, close above here. And eventually the monthly, you'll take a big long journey to get at least into 537. But by then you don't want to wait till that. You probably want to start seeing how we do here. If we could do short term, you could be like, okay, maybe I should probably get in, or unless you're risky, you're getting in now thinking that this is what's going to play out. So it all depends what kind of trader you are. Let's look at our geometry. I haven't seen this in a while. Let's see. So you can look and see that the edges pitchfork, we broke above that, so that's good. We got the 75%, which we're above. We found support at it when it pulled back. This will probably be your area you want to watch when we get there. Looking at our channel, which is more closer, this is the one you want to keep an eye on, because it could probably go up there, and if it's this week, you could probably at least get to there around 235, 236. Remember those numbers? We've been going in, on the simple glance and the market profile. And then this is your big one up here. FT levels, we're back to one of the DNA levels of nat gas, 225, 228. Your next one will be 238 to 239, pretty much around that 240 area. This would be your next DNA level of nat gas. And if we could get here and close, I mean, this is big picture, 279, 281, but we'll take baby steps. Let's get to 239 at least, or 240. 240 is an interesting number. Let's see, Gann fans, these are the ones that retail will use. I just want to see what they're looking at. And you can see that we have open space at least to this fan. So that's what they're looking at on a non-log scale chart. Gap fill, we have 208 to 197, change of contract right here. And we have this one right here. We haven't got filled. So now we have 2. Will it fill it now before we go up? It may go up. And then in the future, when it comes back, it may fill it up. So that's how I'm looking at it now. Let's see how it's going to play out. Measure move to the upside. Keep an eye out for 236. Remember that number keeps popping up? That one has to do with a measured move, and that one, in regards to time, is 911. Ooh, 911, interesting. So keep an eye on that. That's your target for measured move technique, 236. And these are other ones that I'm watching to see if it's going to continue going higher. So let's say this thing really wants to move higher. Your max measured move target would be 246. Not 246, sorry, 346. It's 345. This is your biggest measured move. And your second one would be $3. Pretty much close to testing this high of 315 of June 11th. Interesting. So yeah, so keep an eye on that. Let's see, trend lines. So let's look at trend lines. So on a non-scale chart, trend line, you're already right here, and that's pivoting from here to here. And then you got open space from right here and going to a log scale chart using some trend lines. I want to see what's the difference between these two. Yeah, you got open space here too. Let's give it at least a year. Yep, you got open space right here until you get to this trend line, which is this green line is actually this one on a non-log scale chart. So the non-log scale chart guys think, all right, we're hitting resistance, be careful. And the ones that use log scale, they'll be like, oh, we got a little more to go. You can see the psychology of what you see. It's all about perception, what other traders are seeing. So keep that in mind. If we could push higher into there. I don't think I have anything else here. SO, let's look at SO lines here. So this is from the 611 high. The 3/4 had obviously landed with the change of contract. We pushed higher, so I think the date you will probably be concerned if we're going to continue pushing higher or grinding sideways to higher would be September the 23rd, which is an interesting date. September 23rd, you want to keep an eye out for this move, possibly maybe exhausting. And I say possibly, I know it could probably continue going. You know, seasonality. The last week of August, it kind of gets weak on certain things, but it could continue pushing into September and even October, depending, you know, if you're looking at the 5-year, 10-year, 15-year, and other data sets could tell you that maybe it could continue grinding sideways to higher. Let's see how the weather is. I'm here in Nashville. It's getting a little cooler. Yesterday I was cleaning the front of the house and it started feeling good. I actually like it. This is my favorite season, the fall. I love the fall. It feels like the AC is on constantly when you go outside. The humidity is a little gone. It just feels nice and good. And it was a great, beautiful day yesterday here in Nashville, Tennessee. But I digress. So let's see how that's going to play out. Let's just go straight into the midpoint chart. So big picture target. Let's see. We got PPS buy signal on the weekly. Mobiles are still negative. This is your big picture target. If we could get up there, 256, 255. So if you're not in and you think maybe, all right, can we close above 230? If we can, this is very possible. Your next one, using the monthly pivots, you can see that this is a line right here at 230. This is our high of last month, which is right here. We're here now. You got obviously 237. Remember that 237, 236. And then you got, what is this right here? You guessed it, 240. So these are quadrants between here and here on the next time frame, which is the monthly. It could stall here. Or stall here and maybe turn. So or just kind of go sideways and then maybe push higher. So these are your two big levels. And you can see that the daily chart using the monthly pivots, the mobile's already positive. Stokes are unwinding to the upside. So you can see that the energy is up. Mobiles are positive. At a PPS buy signal on the 29th, and it was just, it pulled back here. We're buying the dips. You're above the moving average. So things are looking good on the daily chart. Looking at our 4-hour chart, you see that you're above the moving average. Mobiles are positive. PPS buy signal as of the you could say the 5th of September. And we were right here. Targets for the whole week let's put it this way. We need to hold at least 218 for this whole week to be on the bullish side. Once we crack 218, we're back to weakness because now you're below your midpoint for the whole week. So that's the most important thing right here. So if it pulls back and you're bullish, this would probably be a nice area to get in, and then put your stop really tight so you won't get stopped out. It's like, okay, this is my opportunity that I want to get in and see if we're going to go higher. And this is your midpoint. Targets to the upside will be 234 all the way to 240. Well, remember that number 240 keeps showing up? There's a reason why it's all connected and it's showing up. 234, 240 target for the week. And it could continue going higher, but I'm just giving you realistic numbers. Mobos are positive. Stokes are very positive. So these are snapbacks. The snapback right there. These you'll be buying. You know, I mean, in hindsight, this is what you, when you see them all here, these snapbacks, you'll be buying these at maybe at key levels. And lastly, looking at our hourly chart and the daily, for this is for Sunday night, Monday, we need to stay above 226. And targets to the upside will be this one right here, 231. And this one is 232 for Monday, Sunday night, Monday only. Short-term scalpers or whatever, these are nice targets to the upside. But this is your key level for Sunday night, Monday trading, 226. Can we hold? Will we get a gap up? We'll see. So far, Mobos are positive as of now, and the Stokes are more on the bullish side. So everything's looking so far good. The bears try to bring it down, and we try to push it up. So those are my thoughts. It's going to be an interesting, fun week. Let's see if we could close above 230. And if it does, that's going to be interesting. It'll be bullish. It's probably going to be grinding higher. But if we start, start the week pulling back in, then this was a failed new high. And it looks like then we're still consolidating to see what the Black Widow wants to do. I'm going to sign out. Hope you like this video, and I'll keep you posted on my thoughts on nat gas.